Hi, this is Jack from Alpha Charts with a state of the market video. Today is April 17th, 2021. Before we get started, this video is for educational purposes only. These are not recommendations to buy, sell, or hold any stock or security. And I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, so starting with SPX, going out at all-time highs. That's always a bullish thing, right? Again, getting kind of extended, but it's been extended for a while as the 23-day EMA kind of moves higher. We're now was about 4%, maybe more. Let me see, 3.34% extended. So it's not crazy. It's been, in that range this whole kind of way up. It could continue. We'll see. But again, all-time highs. That's the takeaway. Let's look at the RSP. So this is the equal weight, and you can see that it is also at all-time highs. Things are looking good on the RSP also. Let's just look at RSI real fast. Okay, RSI is getting extended, which is good. I mean, so we can expect maybe a pullback or chop. As we can see, every time it gets into this frothy-ish range, you get a small pullback, higher, gets back into the range, pullback, higher, back in that range. So again, maybe this week a little pullback just to check back to the 23-day EMA like it has in the past. Again, I don't use RSI that much, but I'm going to use it a little bit today. Here are the Qs. The Qs broke out this week to all-time highs, which is interesting. This is the cap weighted Qs, right? So basically Apple and Amazon and Microsoft and all them have a weighting in here greater than some of the smaller names. So it is at all-time highs, again, decreasing volume and maybe just a little bit of questionable volume coming in right at the end of the week. Again, nothing that I'm overly concerned about, but it's just something I noticed. And so volume right there. Now look at the equal weight. The equal weight Qs has not broken out yet, which is kind of interesting. So it just shows that the mega caps are kind of pulling it higher, and that underneath the surface there may be a little bit of weakness. The volume here is fine. I don't really judge it too much on the equal weight Qs, but that is a little bit, can't really push out yet. And it is kind of extended. So, I mean, looking at base type patterns, a low volume or a little bit of a pullback right here would make sense. Kind of recheck to the 23-day and then break out. That'd be the bullish scenario. That's the equal weight Qs. Going back to the weighted, if you look at it on a weekly basis, weekly chart, that's a beautiful breakout. Haven't got overextended in the RSI yet. Doesn't mean that we're not going to next week, right? But as of right now, there is a divergence that is showing up. It can easily be taken care of next week, right? If we get into 70-ish range, even a sideways move would really take care of a lot of, sideways to, drifting higher. That would be fine too. But it is there. So just to be aware of that. All right, let's keep going. IWM. Yep, that's it. This is back on the weekly chart. The weekly chart just shows consolidation of the uptrend, right? And going to the daily chart, you can see there's your consolidation within the uptrend. Has not made a new high since March 15th. So it's been about a month or so. Again, I'm not reading too much into it. I think, as long as it stays above this, I don't know, probably about 215 or so like that, I think everything's fine. Everything's healthy. That's probably my line that I would say things could get kind of wacky. It is sitting right on the 23-day EMA. So I think that things need to, just start to move again. There's your 50-day right there also. They're all kind of getting bunched up together. I think the 200-day will be much lower, but I don't think I have it on here. It's no big deal. See the 150. Yeah, 150's down there. Yeah, but your 50-day, your 23-day, they're bunching up. They're showing, potential support area in here. If this rolls over, again, below 216, 215, it would be below both of those moving averages. And I'd be a lot more cautious, not only of the small caps, but of the market overall. So the Russell is a measure of risk appetite because they're smaller companies, maybe slightly riskier companies. And if that rolls over, that market may follow suit, but it has not yet. So we'll see. Right now, it's just consolidation of an uptrend. All right, next up, let's look at the financials. Financials, I mean, all-time highs. Nothing that I'm overly concerned about here. It's looking pretty good. Yeah, I mean, broke out, keeps going higher. Let's see what the 10-year is. The yield, yeah. So here's a 10-year. This is kind of interesting. Checking back, and let's go to a weekly because I think this is going to be interesting. A lot of this stuff is just part of the process, right? So here we go, 10-year. It broke out. Now, what's it going to do here? My guess, I mean, what was logical here? A retest of the 1.5 area, right where the 23 weeks will be. And let's see what the daily is. There's their daily right above it, 23-day. But I'll recheck to 1.5. And then if that recheck holds and we scream higher from there, I think that could be a problem. I think that could be a problem. I think that, 3% is a possibility there in the 10-year yield. If that happens, I think the environment's going to be much, much different. So that is, I think that's going to be a big problem. So here we go. So that's a 10-year yield, and I think that's going to play into XLF, and a check back there to 10-year is going to be interesting. SMH is looking beautiful, actually. So that's a positive, right? Here we go. It's consolidating nicely here. Lower volume, things are doing good. So everything is looking pretty good here. Maybe this is a cup and handle, even though it's an index. Again, it still has to break out, still has to prove itself, but the price action is very favorable. Again, and semiconductors are probably the most important sector out there. So that's excellent. Lumber, I mean, going straight up, right? Literally straight up. I mean, I should have been buying lumber, back when I was watching a breakout from here. It's up 50%. So that's amazing. Housing prices are ridiculous right now. I live in South Florida, and they are just ridiculous. There's no supply. Crazy. So lumber being as an indicator, this is definitely a positive, but the velocity of this is where I have an issue. Eventually there's going to be problems, right, with that velocity. But here's lumber since 2008, right? I mean, straight up. So all-time highs. I think that it bodes well for the market for now, but again, it's getting extended. So just something to be aware of if it comes back hard. Almost looks like a potential blow off in lumber. So we'll see what happens. And that could be an issue for the housing market too. But just looking at XHB, again, the velocity is really screaming to the upside now. Let's look on the weekly. I mean, that's extended, right? Extended on lower and lower volume. That is very extended right there. So housing market is still good. Lumber is still good. Things are still okay. Next up, we're going to look at bonds. All right, so looking at the bonds, let's you know, right now the bond market is not showing any stress, and I think that's a huge positive. So I don't think any issues are imminent. Um, but there is maybe again, we have this area, right? 1.49 ish. It's got to break below that to continue the trend lower. Here comes the 23 day. We've seen pops above it. So a pop above it, it wouldn't bother me that much. Again, unless we see things that look like this, right? That would be more concerning. So right now, the bond spreads are looking okay. Next up, we're going to look at the VIX. Now, this is the VIX on the S&P. We saw the S&P going to all-time highs, and you see the VIX is falling. Again, that's a positive, lower volatility, even though under the surface, there's a lot of rotation, there's a lot of stuff going on. So the index is being supported and low volatility, but overall the market is churning. It's kind of interesting dynamic. Keep going with the put call ratio, not overheated. There's still, it's in a bullish range. There's nothing that I'm worried about with the put call ratio. It's not getting to an extreme, and that's what I'm looking for. The value line geometric index, it's right near all-time highs. That's good. It means overall the market breadth is still intact and things are okay. So that looks good to me too. Nothing that I'm worried about. Percent of stocks above their 50-day, not overheated by any means. Again, that's kind of like the churn. It's like one sector pops and then it fails, then another sector pops and then it fails, and it keeps churning through all these different sectors. They say it's the lifeblood of a bull market, that type of action. It makes it very hard trading environment, though. Very, very hard. Again, nothing too concerning at this point. It is making lower highs. So maybe this will be the first significant higher low. We'll see. But it doesn't look, again, it's not an extreme. There's nothing too worrying about this yet. So that's that. Just looking at gold real fast. So gold on a longer term look, I've been watching this, and I'll come back to this every so often. We have this basing pattern on gold. I mean, there's really nothing to see here yet. It was kind of I'll just go to bars here. Yeah, I like lines better. All right, line chart's easier to see. There's nothing to see here yet, and let's go to weekly chart because that may be a little bit more contextual. Maybe it's making the second side of this basing pattern. Maybe. I don't know. It's not proving it yet. It's making lower highs, right? So right now it's still in a downtrend from this peak, which was back in August 2020. So I'm not interested in gold at all right now. Now, if zooming in, this trend line, maybe even potentially this trend line gets taken out, and we see interest rates, right? We see the 10-year check back to 1.5. It almost did it on Friday. And then rebound or chop and then rebound. Like that could be a different environment, right? That could be a much different environment. We'll see. Going with this trend line, we're looking at, $174. I think this is the early trend line to use, 168. But gold is again, it's making lower highs, so I'm not interested in it. But it's kind of, maybe there's another story being told right now between interest rates and gold. I mean, you're seeing stocks like Freeport McMoran, which is a copper and gold miner. It's been doing great since March, and it's maybe something's happening. Let's see, GDX. Let's look at the miners real fast. Weekly chart. This is weekly. Miners. Look at that. They broke out. They came back, they retested, and now what's happening? Yeah, just like they're trying to break out again. That's something that's interesting, right? So the point of the state of the market is to do this intermarket analysis. And as of right now, I think that it should be on the radar of higher interest rates, potentially going much higher. And that would create a different environment in stocks. We're not there yet. We're still churning. This is a hard penny environment. Um, so going back to the Qs, let's just kind of wrap this up. They are at all-time highs. That's the weekly. There's the daily, but I still think that there is uncertainty and churn. And when you see things like Dogecoin and you see things like GameStop and about a month or two ago, and really nonsensical things screaming higher, I think there's a message in that too that's hard to quantify. Um, you know, Under the surface, things are weird, but the VIX is going lower, where maybe maybe it's being held up by the Amazons and Amazon and the Apples of the world. They've been doing well as of recent, but I think it's a hard hitting environment. I think that we need to have a better focus right now on what interest rates are doing, especially the 10-year at this 1.5 level. And actually, it got to 1.53. It doesn't have to get all the way back to 1.5. It's a nice round number, but 1.53, I don't know. We'll see. If it breaks back up, I would get much, much more cautious. Anyway, good luck this week, everybody. I hope this video was helpful. I know it was for me because I always do this. I have a set format, but I always kind of whatever interests me, I just go right into. And I think I'm definitely a lot more concerned about this interest rate story. So good luck this week. Also, if you haven't checked it out, I did a nice interview with Christian Fromhurst. It was more of a conversation. I posted it in my video section inside the Trader's Head. I think you really enjoy it with him. He talks about his process and so much more. He was sharing a ton of stuff. So check that out too. I'm on Twitter at AlphaCharge365. Again, good luck this week. Take care.